Right.
Hey
Okay.
everyone.
Oh, look at that. Nice. That room's filling up really fast.
Righty.
Hey, everybody. Hey, Michael.
Hey Michael. So I put up a little poll yesterday and people wanted to see some price action stuff. And I thought we'd do that's obviously a monstrously big topic. I thought I'd do some of the price action things that I doubt you guys have ever seen before, like some like ninja stuff. And that's applying right now.
Nice.
You tell me when I'm ready. You tell me when I'm good to go, son.
Okay. I'd get your screen ready, Scott, but we're up to, I think we've got about, yeah, there's 80 on the call so far.
Yeah.
Nice. Okay. That's good to go.
Gonna crack. Good morning, everyone. I'm from Phuket, Thailand. Those who don't know me that well, yeah, we're going to do some shit today. Today's not a marketing call. I'm not going to be selling anything. There's no sales pitch at the end or any of that bullshit. Like this is just what I do every day, really. So the first thing that I want to show you is some stuff about what's called price action. Now, price action differs dramatically from technical analysis. Technical analysis is the idea that there's patterns represented in price that repeat in the future. And that's partially true. And it used to be a lot more true than it is now. But because the markets are a lot more efficient than they used to be, it doesn't work as well as it used to. Most of what you see as technical analysis is an artifact of what we call trend or momentum. So what you must have noticed is that there are times when technical analysis works great, right, Ian? Like works really good. And there are times when it just doesn't work for shit. Now, technical analysis depends on having momentum in the market. If the market is moving strongly in one way or moving strongly in the other, then support and resistance and all that other stuff kind of works pretty well. When you don't have momentum in the market, it doesn't work well at all. Okay, so let's start with where we were, and I'm going to show you some price action tricks and some clues. So the way that I want you to see price action as distinct from technical analysis is price action is reading the story of what is happening. You are listening to the market as opposed to predicting it. When you try and predict the market, there's some stuff that if you think like a scientist should be true about any prediction. It should be much easier to predict the market in the short term than it is in the long term because shit changes, right? Like the inputs to the market change. So if you're predicting like an hour out from now, you should probably be able to do that better than you could 2 months out now. And those guys who are saying, oh, we're going to 2024 cycle top based on this Fibonacci ratio, and those don't work, by the way. Don't work at all. And we're going to top on this date and do this and do that. That's all bullshit, man. That's all just the reason people do that is because the game of trading, the job that we have is making decisions under uncertainty. And uncertainty really sucks. It feels bad. It hurts your feelings. And so you guys are all on this call right now because you're all trading and trading is highly uncertain. And you'd really like someone to tell you what the fuck's going on. And I'm that guy. I'm your solution to the problem of uncertainty. Other people take that problem of uncertainty and try and solve it by making elaborate predictions about the future, by finding a group of people on the internet who believe exactly the same thing they do. Like you'll find these little bearish blogs where people who've been talking for 10 years about the market about to crash and it's all a scam and the Fed's manipulating it. You know, people do stuff to fix their feelings. And the central truth, there's a couple of truths about trading psychology. The first truth is you've got to feel your feelings. if you start acting out on your feelings in the market, it is a very expensive place to work through therapy. You know, mummy spanked me and I feel like a loser and I'm going to lose in the markets. That's a shit thing to do. The second thing you need to know about trading psychology is just because you feel like a cunt when you trade badly doesn't mean that's the cause. Doesn't mean that feeling like a cunt makes you trade badly. So you've got to correct that big misapprehension. Most of the very best traders I know, much better than me, like wouldn't have what you'd call good trading psychology. Trading is a job, it's a mechanical process. You've got to know stuff. So moving back to price action. This indicator here, average true range percent. There's a reason why I'm using percent. I won't go into it now, I'll just bore you. You could also use standard deviation, which is a more accurate measure of volatility. And it's more sensitive too. So you can see that when we have exceedingly low levels of volatility, like exceedingly low levels of volatility here, usually something's about to happen. And markets cycle naturally from periods of being exciting to being boring. And it was very exciting around the ETF. And then it became annoying and then boring. At the point where you feel that markets are very, very boring and you don't want to follow them, that's the time you got to pay attention. All of your best trading setups, all of your best trading will be done when the market is so boring you can barely bother to look at it. So what happened here? We have a very classical price action setup called an inside day. An inside day, and it works better when we're at low volatility. An inside day is a day with a lower high than the previous bar and a higher low. So a lower high and a higher low. We look for the direction that it breaks out and expect that to continue. This has an effect for about 4 bars. So you can see what's happened here is we broke out to the upside and then it kept going. Let's talk about price action. We're not doing predicting. What we're doing is observing what's going on. So in the purest sense, what's going on here? We have a close near the highs and a bigger range. This range is about 1.5 times the old range. And we close right at the highs. When it closes right at the highs, what that tells us is that at the end of the day, no one saw that, or very few people saw that and said, fuck, I'm going to bank a profit, I'm out here. Everyone said, that's good, we're on. I'm holding that position. Now, the very next day, the first thing we look for is, did it open and try and come way back down here and then end up high? So we have another up day. But a very important clue is that no one sold at the open. All right, now there's an old trader saying that amateurs control the open and professionals control the close. This is kind of true. So what happened at the close? We had a very small amount of selling again. And after 1, 2, 3, 4 days of up, you can see what happened is we have a very big day and then some profit taking. Not much profit taking. So what does that tell us? We have an expanded range. An expanded range is the distance from here to here. Sorry. That distance, that distance, that distance. These tend to flow in waves. And once they keep expanding, and once they keep contracting, they on average, not every single day. Now here, what do we have? How much over? The questions are, how much overlap do we have with the previous bar? Well, we have 100% overlap. We have another inside day. We have a little bit of selling at the start of the day. We have a little bit of profit taking at the end of the day. So what this tells us, way back here, the market is balanced. How do we know that it's balanced? Because for nearly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, the market basically traded in the same sort of price range. That tells us that buyers and sellers are out of whack. What is the dynamic behind that? Is there's a certain number of buyers and a certain number of sellers, and they've got ammo. Using up selling ammo pushes it down. Using up buying ammo pushes it up. Treat this like a World War I war of attrition, or like a 1920s prize fight between two of those old school boxers. They're not dodging and ducking and weaving. They're just standing there and just trading blows. And eventually one guy is going to get tired or get hurt. And when that happens, at the end of a trading range, and the longer the trading range goes on, the winner tends to run away with it. This is the way of things. Now, there are clues. So what's happened here? We have a trading range. We have a breakout. We can reasonably expect it to continue. It is continuing. People have got confident and more people have jumped in. How do we know more people have jumped in? Expanded range. If we throw up volume, almost certainly we're going to see bigger volume, right? We have a smaller range and we have some selling. We have a slightly smaller range again. And is that today's? Yeah, that's today. So this is a partial bar. Never pay any attention to partial bars, by the way. Okay, any questions on this so far? Okay, let's talk about how and when you take trades before a breakout. And let me show you, let me show off a little bit. I'll show you one of the best trades we ever took. I made like 300 grand on it back in the day. This shit. Let's go back to okay. So this was the trade. We bought here and we sold here. And 4 years later, that's pretty fucking good. I'm very, very, I've done that like 3 times in my life. So don't. All right. So here's how we know about the breakout. Couple of things. When you have a trading range, and a trading range isn't about it being a perfect box or a shape or whatever, like that classical tech. That's not it. A trading range is a psychology where, make this a bit bigger so you can see it. Trading range is a psychology where when it gets too expensive, people sell it. And when it gets too cheap, people buy it. Now, there are 2 and only 2 theories of investment. The first theory of investment is that you're buying something cheap. Like if I offer you 2006 Toyota Corolla in white, hell of a car. If I offer it to you at $20,000, who's buying in the chat? No one's buying. And I'm guaranteeing that the car is in perfect mechanical nick. It's just been serviced, tires replaced. It's brand new. It's a good one for it. 2006 Toyota Corolla in white. Hell of a car. You'll get all the bitches with that car, promise you. If I offer you that same car for $100, how do you feel about it? That's what a trading range is. A trading range is psychology driven by value. Now, let's see how we know when trading ranges are going to get broken out. A trading range is a war of attrition. Like we said, one of those old school boxers just punching each other, right? Eventually, one side gets tired, and once one side gets tired, the other side can just beat the fuck out of them. They can't even, they're too tired even to put their hands up. Look at what happens just before the breakout here. So here we have 2 down, 2 up, 2 down, 1 up, down, 3 up, down, down, up, down, down, up, down. Lots of overlap between bars, right?
Mm-hmm.
Before the breakout, if you're lucky, you get a clue. And the clue is before the breakout, things start to get in gear. We start to get a couple of things. We start to get series of up closes. This close is higher than this close. 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 And you can get in before it bangs. We got in here because you can see that the trading range is going to end, and we've got the clue, and we're in before it bangs. So before the trading range ends, you get a clue. Now, let me show you a little ninja thing before we get out. Remember I told you that we're not predicting anything. What we're doing is it's a weather report. It's a weather report, not a crystal ball. Anyone who tells you they can predict price accurately, me included, is fucking lying. And the further out they tell you they can predict that price, the more they are fucking lying to you, right? This is the daily chart. By the way, if you're planning on holding a trade for multiple days, if in a perfect world, if it works, really just look at the daily. Most people do the stuff about markets are fractal and the 4-hour is just as relevant as the 2-hour, and that's all shit. That is demonstrably false, and I can prove it to you. I won't bore you, but there's a bunch of maths. That's shit. You need to wash your brain out with soap if you believe that. It's not true. Markets are not fractal. Okay, and I used to believe it. This final candle, I call it God candle, but what this really is guys who wanted it here but didn't have the balls to buy. They're waiting for a bigger pullback. Oh, yeah, I liked it, but I think it's only worth this. I'll buy it back here. It never happens. And they're like, oh, I don't know. Maybe it's a double top. Maybe it's a double top. Oh, no, it's not a double top. Fuck. Okay, now I feel certain. So when markets are boring in trading ranges, no one's real excited, right? Like everyone's bored. No one's making their decisions based on high emotion and like fear and greed and shit like that. Here, people are making decisions based on emotions. Now, strong emotions, human beings aren't set up to feel really, really strong emotions for very long. Like, you know, if you go to the haunted house at the carnival or a roller coaster or whatever, like if you do it 5 times, it's not scary anymore. Like you can only be so scared, and strong emotions are very temporary things. They spike your adrenaline, they activate your amygdala, they leave you feeling a bit weird for about 48 hours. But under strong emotions, people do stupid shit. People doing stupid shit is how we make money. And this candle here, after a big run, if you see a giant candle that's like, you know, this was trading between, I bought it at like 923. So this was trading on any normal day between 824 and 742. So it's, and then here it's trading between 8,800 and 4,650. So in one day, it's trading 50 times the distance that it usually does. That can only be caused by people getting excited and mashing the button. I've got to buy now. I've got to buy now. I've got to buy now if I'm fucked, or I'm fucked. Got to buy now or I'll miss out. Who here has ever felt that emotion? If I don't buy today, I'm just going to miss out and I'll be fucked.
If I don't buy in this next minute.
Everyone's felt it. I feel it all the time. So I'm a better trader than some of you. Maybe not all of you, but I definitely feel the same emotions as you. The difference is when I feel those emotions, I go, ooh, that's a sign for me to do the opposite of what I fucking want to do, because I'm a dumb fuck when I'm thinking like this. Okay, so when you see one of these giant big God candles at the end of a move, you get the fuck out. You sell at least half, and we sold all of it there. Another very good, useful thing for discretionary traders is every time you feel like doing a happy dance or bragging about it, sell 25% of what you got left. That works pretty good. And you can see this all the time. Like, oops. Like this was our exit on sand. We didn't quite get in so early. I got in here there, but you can see the same thing happens. Big fuck off candle that's multiple times as big as any candle, and it was already going nuts. You just sell it to close, right? Okay, now that's all back in the day shit. Let's do some real time shit. Let's make some money to fucking day. Let's fucking go. So what we're trying to do is not predict price. We're trying to read what's happening and see if there's going to be mechanical effects that are going to cause forced or constrained or price insensitive buyers or sellers. Now, the close in crypto, Warren, is at 0000 Greenwich Mean Time, which is 1 hour and 23 minutes ago. Very useful to know. Also, around the close, there's very weird effects because a lot of people are buying and selling and rebalancing, including FinRep, actually. Algos. So there's a little bit of a cross currents. Everything's a little bit unpredictable around then. So just keep that in mind. So what we're trying to do is, in context of what we've got, first of all, the first thing that you want to ask yourself is, are we in a trend or a trading range? You know, we're probably in a long-term trading range there. And now we're probably in a trend, right?
Mm-hmm.
Perry, I generally do trade right at the close, right at near the open, but that's laziness and it's also suboptimal. So do as I say, not as I do. I generally do just because like mentally I'm at my best at around that time and I'm at my worst around the time that I probably should do it. Like I ain't getting up in the middle of the night to do anything. Like sleep, as someone who injects steroids, sleep is the one true performance enhancing drug. So never get up in the middle of the night to do trading. That's a good way to get wrecked. When is the optimal time? They're all roughly equal, except for the 4 hours after 0000 Greenwich Mean Time. And I can show you a bunch of maths there, but I'm just going to nerd out and I'll lose half of you. So are we in a trend or a trading range? Now, the key thing to ask yourself is, would my 4-year-old say that's a trend? You know, it's not, if you have to, and I call it the law of squinting. If I have to squint at it to say it's a trading range, then it's not a trading range, right? If you have to squint at it, it's not. It's got to be obvious to a 5-year-old. And what is a trend? A trend is something that starts at the bottom left and goes to the right. That's a fucking trend. what happens in a trend? There's always people over here. And they always have a sad face because they're fucking pussies. When's the best time to get on a trend? As soon as you notice that it's on. Like right around anywhere between here and here, this is the best time. Right? As you go further up, think of it like a game of Jenga. It just gets more and more risky the higher the tower gets, right? So anytime you see this, the first thing that you want to look at and not predict is the first pullback, the first meaningful pullback. Like, I don't mean like if we see a move where there's some indicators, early indicators that we're on here. So the early indicators are a long string of bars where where the sellers can't push it below the previous daily low. And the longer this string is, by the time you get to 7 or more, you've got a very, very high probability of a second leg up when you get a pullback. So here, 1, 2, 3, 4, 5, 6, 7 in a row where it couldn't break the daily bar low. That's a very good sign that the first pullback, and this attempted pullback was bought that day. So we haven't really got a pullback. No, that's not a God candle, right? Because they're selling, right? Now, look at this first pullback. You want to really evaluate closely the first pullback. If price is very overbought by then, it's gone from $17 to $67, right?
Mm-hmm.
It's very overbought. Anytime, put yourself in the position of the guy who bought it for $20, it's now $60. You've got a 3x. Plenty of dudes would just cash that and walk away and go buy a car or like some hookers and blow or whatever floats your boat and say, that was great, let's do the next one. Like plenty of guys would do that, and I've done that. What you want to look at is how many sellers are selling. Are the sellers keen to dump their bags at a higher price? And the second thing is this guy. He's feeling like a cunt. He didn't buy here. He was waiting for a pullback. He's waiting for a bigger pullback. Did he get the pullback he wanted? He was probably hoping for a pullback back to here. He was wanting that. But other dip buyers stepped in and bought it. Now, there's two ways that price works off overbought momentum. The first pullback in a bull move is what you want to look at. If it doesn't go down and just goes sideways for an extended period, like here, we had, from 14th of October to 15th of November. So we had a month up, and 15th of November we had 4 weeks of up and 3 weeks of sideways. That's enough. That's enough to shake anyone who was going to sell 3 weeks. They're getting bored. Other shit's booming. Maybe I'll sell my Solana and maybe I'll buy this fucking cocky new coin, or I'll buy this or I'll buy that. So when you see these sideways periods as a first pullback, that is a very strong clue that you're going to get a very explosive run next. Everyone following me so far?
Yeah, nice.
All right, let's continue to move. So right now, here, we probably had 50% confidence that, maybe this is betting odds, but maybe this one could be big. We're not 100% sure. Then we're like, oh, wow, my confidence in this trade is going up. If you have some here, you should buy some more when you see that. The next thing we want to look at is what happens when we get a pullback? Because the market price discovery doesn't happen on this chart alone. This is one of the big fallacies of technical analysis, that you can just look at this Solana chart and make all your decisions off that. But price discovery doesn't happen here. Price discovery happens between the Bitcoin and altcoins, and it happens, between the correlation between the stock markets and this, and the liquidity in JPAL. John, we probably won't get to Validata today. We're just going to do price action, because it'll just overload you all if I get to that today. We're going to cover it all. Okay. So what we're seeing here is the pullbacks are very, very small. Like, you want a more substantial pullback when you've got a trend that's been going for a while, and then that trade goes nuts. What do I mean by trade goes nuts? I mean, we have bigger candles. At the end of each bar, we have very small or no selling. So we see lots of bars open at the lows, close at the highs, expanded range. So expanded range means the distance from the low to the high is bigger than normal. So here we have open at the lows, close near the highs. I just use retrace. I use black and white candles. Some people use other colors, red and green, and I use generally no indicators at all, because I don't need it. Because indicators are like training wheels on a push bike, right? Like, at some point, you just got to grow the fuck up and take the indicators off. What about other indicators that everyone else uses? Okay, they are. There's two types of indicators. There's indicators that are a derivative of price, and if you're using an indicator to tell you what price is doing, it's much easier once you have a certain level of skill to actually just look at price. If you're using other indicators, like, that have nothing to do with price, that are measuring volatility, that are measuring open interest, that are measuring liquidations, extremely useful. And we're going to get to all those. And price, all of those, MACD, RSI, all of that, it's price turned into a squiggle. Okay, that's what they are. They're price turned into a squiggle with a formula. If you've seen enough charts, you really don't need to turn it into a squiggle. It's training wheels. Okay, so moving on. We have an expanded range again. So it's even bigger than the day yesterday. And yesterday was pretty fucking big. Yesterday was the biggest one we'd had in a month. And we closed near the highs, and there was almost no selling and almost no overlap. So notice our inputs here, where how much overlap does this bar have with the previous bar? You can see we've got what, 20% overlap, if that, 15% overlap. How much selling was there at the start of the day? How much selling was there at the end of the day? Next bar. What have we got here? Some guys thought it's gone up quite a lot. Time to bank some profit. Perfectly reasonable thing to do. That doesn't say anything of itself. What we're looking for is the reaction of these sideline guys. Does he get a boner for seeing this? And clearly they did. He's got a massive big boner for the smallest of pullbacks. Like, this is not a big pullback. And the sideline buyers, I've got to buy. The next day again, we got a small pullback. Sideline buyers jumped in. Were they selling? Now, you can see here in these last couple of candles, now we're starting to see it's still going up, right? Like, it's still going up. This is still good. But now we've got a more substantial selling pressure. guys are starting to go, well, that's been a good day at the races. Like, okay, like this fucking ridiculous. Bought it at $20. It's 116. Come on, come on, guys. I'm enough. And then the next day, we predictably got more selling, dip buyers predictably more jumping in, and we're starting to get into this territory. So anytime you've had a massive months-long boom move, you can expect dip buyers to jump in on any dip. Why? Because they've just been conditioned. And this is a human nature thing. We always remember we overweight the recent past. Now, does anyone know the reason why we pay much more attention to the recent past than anything else? It's an evolutionary thing. You know, Caveman Perry, he's sitting in the African savannah around a campfire. He's talking some shit with Caveman Richard Bannister. They're like telling some stories, talking about which bitches they like. And then they hear a rustling in the bushes. That rustling in the bushes, that could be a lion or a tiger or some other nasty fucker. You have an evolutionary reason to stop what you're fucking doing and paying attention to the recent information. So a lot of the major financial disasters that we see are caused by people thinking that recent history will continue on into the future. And so it is. Now, you can't say this is over here. This could easily have just kept going. But what happened is December 26th, by the way, when we cashed out all our 100x altcoins, I cashed out like 304 grand worth of them. This was a fucking perfect exit day. And why did I cash out everything and everyone on that day? It wasn't because of any technical analysis thing. It was because I felt so fucking pleased with myself. I was so fucking proud, like a fucking nailing this fucking thing. And it's always just, if I'm feeling that and there's a word for what I am, and it's an ugly word, but I'm a complete fucking psycho. And if I'm feeling that kind of stuff, then everyone else is. And that's a sign for us to get the fuck out. If you're feeling strong emotions in discretionary trading, you have to pay attention to those, not as I'm feeling strong emotions, I should do more. You should be like, I'm feeling strong emotions. Strong emotions are the retard side of me. I should probably do the opposite of what I want to do. So here we're still in a bull market. Price discovery happens both here in Bitcoin. This was the ETF was coming. This was like a few days before the ETF. We're getting a pullback. I was actually expecting a pullback to at least here. That was what I was expecting. Now, one of the things about discretionary trading that makes it hard is every time you have an opinion and then you draw a line in a chart and you go, oh, that looks right. Then you tell it to someone. It's even worse if I write an email about it. If I tell all you guys, this is what I think is going to happen. And I did. I told you all, this is what I think is going to happen. And we're going to get some stink bids. Every time that happens, the nature of your memory, the nature of your brain, every time you think something, it becomes more and more solid in your mind. It goes from being a theory to having weight and heft and fact. So if you're going to do this kind of discretionary trading, you have to be extremely willing to change your opinions. Extremely willing. So what you want to be doing is every time a new bar comes across, you get a new piece of information. Okay, we're in an uptrend. Hella strong uptrend. This looks like a blow off top. Okay, one thing that some of you might not know, uptrends end in strength. We know that uptrends end in euphoria. This is why, because I'll run out of time if I start telling you. So we're still in an uptrend, but we've got a primary view that shit is getting a bit nuts. Could continue, but at some point, the odds of continuation, back here, we've got a 5-to-1 payoff. Up here, what are we betting on? We're betting it could go down to 60 and it could go up to 130, 140. Kind of a sucker bet, right? Like your job here is not to predict future prices because you can't fucking do that. Warren Buffett can't do that. George Soros can't do that. You sure as fuck can't do that. And you ain't George Soros. And neither am I. So we just got to, and there are people who are good enough to do all that Fed watching macro, fucking this is going to happen and this is going to happen in China. It's going to affect interest rates here and this and that. There are people good enough to do that in the world. And they get paid tens of millions of dollars a year. And you can tell that you're not one of them because you don't fucking get paid 10 million bucks a year. And if you did, you wouldn't be here listening to me. I'm a fat guy on the internet. So we can just say that any of that sort of like, I'm going to read the news and come up with this macro point of view and the Fed's going to do this and interest rates are going to do this, it's going to do this, it's going to do that. You're fucking retarded. As our head of research, James, says, you're trying to beat Djokovic at tennis. And instead of a tennis racket, you bought a dildo and you're retarded. Like you just can't play the game at that level against those guys. So don't try, you're going to lose. So here, what are we thinking? This is a pretty reasonable buying opportunity, right? It's the first pullback in a long time. We can reasonably expect people to start buying that. Okay, so now what we want to do is say, okay, that's a reasonable pullback. That's a pullback that it makes logical sense to buy. Now, instead of predicting how much buying pressure is going to happen, let's listen. Let's go one bar by one bar. Okay, we got some buying pressure. How much buying pressure? Back up to where we were a week ago. It's a start. I would say that bar, because it opened at the lows, it closed at the highs, it was a bigger range than the previous bar, would be an encouraging bar. If I was looking for a dip to buy in Sol, I would see that and go, yeah. So what are we expecting if there's an uptrend? We would expect buyers to have a high confidence and pile in and probably push it up to around here, right? Period volume is highly correlated with range. So there's a couple of wrinkles with volume. It's different in crypto. It's different in perpetual futures in crypto, and we'll cover it in another call. But volume in general, you can do without most of the time. So we're expecting decent move. Whoa. Okay. So this is the clue for us. So what we're doing is we're being Sherlock Holmes here. We're expecting it to go up. And we're not getting what we want. In fact, what happened? Buyers pushed it up and then people started to sell and it closed even lower than it started. What the fuck? So what that tells us objectively is that as price went up, people who already own the coin use that as a selling opportunity. We call this distribution. And this concept was invented by Mr. Dow Jones, who's the Dow Jones back in the day. So I'm a Sol owner. I'm holding this. There's only two elements. There's only two elements to discretionary trading. So some of you might have done like some stuff that I used to think was good, like you're measuring the distance between your entry price and your stop loss and your target, and that's your risk return, and blah, blah, blah. That's all shit. I no longer believe any of that. Trading is much simpler than that. There's two elements. The first is how much do I like the trade compared to yesterday? So How much do I like the trade there? Fucking pretty happy with this trade. How much do I like it? 95%. That's a little bit weird, but that's nothing. How much do I like the trade? Yeah, I still like the trade. Like, buyers stepped in, no problem. Like, it's been 6 days without a pullback, no problem. I still like the trade. Yeah, still like the trade. Like, it's still trading in the range of the previous day. Still like it. Okay, maybe I like it a touch less, maybe at like 90% of what it was, but we've still got buyers coming in there. Like, I'm still kind of happy. Rich, there's nothing wrong with volume. It's just it's just like 90% correlated with the size of the candles. So once you get used to reading the charts these ways, in terms of paying attention to the size of the candles and the overlap of the candles, you'll find it superfluous. Like volumes, and this doesn't apply to perpetual futures volume, which actually is an edge, and a particular type of volume I call Boner volume, which we'll be covering later. So how much do you like it here? Looks like it's stabilizing. I still like it. I like it about as much as yesterday. What have we got here? We've got an inside day, lower high, higher low than the previous day. I still like it. I like it just as much as long as it doesn't break the low of this bar. And I like it a bit more if it breaks the high of that bar. So I'm kind of thinking, that's kind of what I'm thinking. So there's only two elements: how much you like the trade and how much risk you want to take. Now, if you like the trade a little more, you buy a little more. If you like it a little less, you buy a little less. Like I'll show you some shit that I bought just now because I like it a little bit more. Okay, what about this? I've got no opinion on that. And why have I got no opinion on that? Because it didn't fucking do anything. It started here, went up, went down, finished where it started. Did fucking nothing. Fuck you. How much do I like it now? I like it a bit more. I like it quite a lot more, especially after a pullback, because what we want is for it to shake the weak sellers out. It takes a certain amount of giant balls to hold a trade from here to here and keep holding it. It really does. You either have to be completely stupid, total psycho, or you have to be really fucking good. But the guys who bought here, 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 and here, they're what you call weak hands. Why? Because the guy who paid 120 bucks for it, who's underwater, he's checking this every day. The guy who paid 10 bucks for it back here, he doesn't even care. He probably checks it next week, right? Completely stupid is to your advantage many times. Now, when I see this, how much do I like it? I'm on high alert there. I'm seeing that candle and I'm going, what really happened in this bull market? You can see we've got this characteristic zigzag pattern up. All bull markets look like this. Why? Price goes up too high, people bank profits, it drives it down, dip buyers step in, drive it up, everyone gets excited, takes some profits. It looks like this stairway to heaven pattern. When we stop making this stairway to heaven pattern, we have a problem. See how we went down to here and then up to here. Now, this is the important thing to understand. The bulls here are expecting this. Why are they expecting it? Well, because it's just happened 5 times in a fucking row and we're overweighting the recent experience, right? Like we always talked about it, right? We're completely overweighting this recent experience. Now, very important principle of price action is that we can know the highest probability outcome for a trade But if something is a low probability outcome, it catches people by surprise. What happens when someone frightens you by surprise? It frightens you and it causes big emotions. And big emotions cause bigger moves in the opposite direction. Our primary profit opportunities are from the emotions of other traders. So we've got this stair-step pattern. This candle breaks it. This candle is the clue that we're doing a longer pullback. Okay. So at this point, what do we know? We know that the highest probability is that we're either going to work off our overbought momentum, and working off overbought momentum means we're going to shake out pussies. We're going to shake out these pussies in two ways: by scaring them or by boring them. Those are the only two ways. We had 3 months of up, 1 month of sideways and down. Ordinarily, I would say that's not enough. But let's look at the form of this move off the lows. What have we got? 1, 2, 3, 4, 5, 6 days where the bears can't push it down below the low of the previous day. The first pullback is very shallow. And this is what clued us in. We bought, when did we buy? Let's just check. I bought some more yesterday, so I won't show the right price, but let's go to trade history. No, that's the more that I bought yesterday. Let's have a look. So we opened at 95.807 and I added more yesterday at 109. So let's go back to that. What makes you add to a position? Really great question. Remember, there's only two elements. How much do I like it and how much risk do I want to take? And I'll show you why I liked it even more. We're going to get to that. I'll show you why I liked it even more than I did when we bought it at 94.87. So we bought it right here. Now, every time we own a trade, every day we want to wake up. Oh, by the way, don't be screen watching. You watch this shit all day, you're going to send yourself nuts and you're not going to make good decisions. I check these charts like twice a day. So the first thing that you want to ask is, why did I buy this fucking trade? I didn't buy it because I knew something special that someone else did it. I didn't buy it because it was a coin manipulation that I was getting in the way of or profiting from or riding along. I bought it because I thought momentum was strong. And why did I think momentum was strong? Well, one of the things I do is I look at FinRev. Perry, there's likely no big pullback coming before the halving. It's probably going to rip and run. It's what it feels like. No guarantees. Like, I don't know the future any better than anyone else. So let's have a look at how we use FinRev to. So you can see that from here. Actually, let's look at it longer because it'll make more sense. So FinRev gets long here. Starts banking profits around here. Almost gets out of the position. Right here, right? Here we're down to a forecast of 1.77, which is basically flat. The only reason the charts are actually more accurate in the FinRev dashboard, and the data is more complete. I use this one because it's super fast. Like, I don't have to click and like. It's just like super blazing fast, right? That's the only reason why I use it. It's actually not as good. So out of here, FinRev is building a position. And so FinRev is ahead of me. I didn't buy until here. But FinRev was already like half a position. And now FinRev is at a full position. And we've got momentum coming into the regular markets. Betting odds. Now, let me show you something else. We have, is it behaving right? Well, we have another one of these string of bars where the daily low doesn't break the low of the previous bar. What that tells us is that every time a market goes up, sellers will jump in and sell some to bank some profits. These guys are not selling enough to push it below the low of the previous, to push it below the low of the previous bar, the low of the previous bar, the low of the previous bar, the low of the previous bar. Even yesterday was a down day, but I'm not worried because it didn't break the low of the previous bar. Now, let me show you some ninja shit. The best time, the absolute best time to get in any trade is at a historic low of volatility. So, you get in here, you write a nice move, but you get in here, you get like right at the start of the move. We've got the lowest volatility since all this kicked off in October. What that tells us is that we are almost certain to have an increase in candle size, an explosion in volatility. And why am I able to predict this and I can't predict any other shit? Well, there's a mathematician called Benoit Mandelbrot. He was professor emeritus of mathematics at MIT, and he invented chaos theory and he invented fractals. If ever you've seen those Mandelbrot patterns, that's it. That's the guy, the Mandelbrot pattern guy. He did the biggest analysis of volatility on financial markets that's ever been done. Markets aren't fractal. Fractals are fractal. But volatility is highly predictable. Price is not predictable. Volatility is highly predictable. We know this because part of our FinRev system is predicting volatility, and we predict that within like a 97% accuracy and have done for years and years and years. So we can predict volatility. Volatility cycles from exciting to boring, to exciting to boring, to exciting to boring. It's like, because human nature. We know we've got it. Even though price is going up, it's going up in a way that's boring and steady. This shit has got to explode in one direction. Once volatility starts kicking off, we have a very strong probability that it's going to continue to rise. So once it starts moving, we have a very strong probability that it's continuing to rise. Now, I'm preempting this. What I probably should have waited to do was wait to see just the first little uptick like that. But, and here's a big but. Remember, we're looking for forced, constrained, liquidated. We're looking for sellers taking it in. We're looking for traders taking it in their ass. You can tell Ryan, you should open up an Electrum wallet, transfer your Bitcoin from PayPal to your Electrum wallet, and then transfer it back. We're thinking that the market is going to explode because this volatility is low. We're almost certain of that, but we don't know the direction. Do we have any clues from the price? Well, fuck yeah, we do. This really is inconsistent with a market that's about to crash. Because if you look at markets that crash, let's look at markets that crash. Markets that crash have these big candles. They go nuts. They're not. What's a market that's crashed recently? Has there been anything?
Yeah, what about like Bonk or something like that? Or
Oh yeah.
I think the cock came down pretty hard as well.
Yeah. So markets that are going to crash always have these big God candles, big shooting stars, or the one that we were in, Cock Inu. We bought before it was even listed and sold here. So Solana in comparison doesn't look like a crash situation. This is looking definitely more bullish than bearish. And we know that it's going to explode in one direction. What we also can make a reasonable guess, there's going to be stop losses here. Stop losses cause forced sellers, cause forced buyers. If your stop gets hit, they're just going to lick. And we know that there's going to be stop losses here and liquidations happen here. Now, if you want to get liquidations, you can use velodata.app, you can use Coinalyze, there's a bunch of them, but liquidations. Liquidations are when traders get margin called, and you can see where they happen, and you can reasonably bet that there's going to be liquidations here and stop losses here. So what we're playing for is an increase in volatility causes the candles to get bigger. The candles that get bigger trigger some stop losses here, which puts it within spitting distance of here. Once it gets to here, no one's going to sell out because they know that it's going to liquidate all these guys and cause a short squeeze. So we have this sort of mechanical domino effect that we're no longer predicting. Now we kind of know because we understand the mechanics of how markets work, and we understand that if it gets to here, it's going to get to here. If it gets to here, it's going to jam, yada, yada, yada. Does everyone understand that? I mean, this was pretty detailed stuff today, right?
Yeah, this is really great.
Nerd shit. So if you can get this stuff right, which is a big if, this will outperform FINRA for sure. No trading system can do as well as a ninja trader, like doing his shit, like yanking and banking like an animal. Now let's look at me. Let's look at some of my results. Okay, so let's look at, I opened this account and put $10,442 in it when mid-November. I've been able to take that to 56,000 plus my open profit. So I've been able to take $10,000 to $80,000 since mid-November. And you can see my open trade profit right now. IMX is at 20 grand profit and blah, blah, blah. Like that's pretty fucking good. No automated system in the world can or should be targeting those kind of gains. It's just not responsible. But, well, I did it with max drawdown at 20%. Well, that's pretty fucking good too. Like, I got to say, that's pretty fucking good. Ordinarily, I would expect 50% drawdowns to do something like that. That's just an exceptionally lucky result for me. You got to ask yourself, what's your risk tolerance? And as you start to make these money, as you start to do this, I have zero. I'm not going to take this 80 grand now and keep doing it with this. I pull it all back. I pull it all out of, shove it in FinRev, and then start again. That's what I do. No, these are all group. No, these are all group calls. This is just. It's actually been better than that. This is all. This is the stuff that we do in the 100x Coin Club. So you can see that the 100x Coin Club stuff is much more profitable than anything else you could possibly imagine. It's also higher skill, pretty fucking hard. It's nerve-wracking. Will hurt your feelings from time to time. John, I don't think we're going to get filled on stink bids on BTC. I mean, that may change. I thought it was going to happen. I think I was wrong. And you have to be readily willing to admit that you're wrong. A stink bid is a bid that's way below price right now. So a stink bid on Sol would be saying, I'm going to place a bid right there, just in case there's some sort of market crash, nuclear bomb goes off, or like that could happen in the Middle East right now. Nuclear bomb goes off, this thing will crash for like an hour down to here. And if you're the guy who's got the stink bid in, you'll get filled at an incredibly good price. That's a stink bid. What about Matic? Looks very similar, a little weaker. Looks very similar, strong coin. Now, let me show you something else. I'm going to share this link in the chat. If you guys don't know how to build these charts, here's mine. You can use it yourself. The one on the top right has all the coins we follow. Before you buy a coin, what you really want to do is go back to the last decent pullback, which was really to 24th of January, 23rd of January. And what I'm going to do is I'm going to place a vertical line on here. You can see everything crash right here, right? So what do we want to know? We want to know after that crash, whenever it was, there it was. We're going to put that right on the edge, and we're going to see what's done the best since then. Greg, I did get into BSV, and I'm in loss in BSV, but I'm not worried at all. That one's going to be a very, very satisfying trade. Don't worry, BSV's fucked. It might not be common knowledge, but I have a law degree, and I watched the guy perjure himself a number of times in obvious ways, like he and winning that. Okay, so what you want to know before, what I like to do is have Bitcoin as the blue line. So you can see Bitcoin is the blue line. This is a good indicator of how strong our market is. In the early stage of a rally, you can expect the coins that are beating Bitcoin that are of reasonable size. Like sometimes a coin can beat Bitcoin just because it's a tiny coin. You can expect those to be the winners. I dropped it to 15-minute chart because it doesn't show enough data. If I drop it to 1-minute chart, it might, I don't know. Might yeah, see it it runs out of data there, so maybe 10 minutes is right. Okay, so the first thing that I want to do is say, is everything going up? And clearly this is 0, 0, 0. So let's put a horizontal line on it. Okay, we've got only 2 coins that haven't made money off the lows. These coins you cannot buy. You're a fucking idiot if you buy those. Don't buy those. What we really want is to buy the strength. And the strength is exactly what you think. Tia, Gal, Sol, Rune, AVAX, Link. You know, the battle isn't always to the strong and the race isn't always to the swift, but that's the damn sure way to bet. It is OKB, which is MKR's down the bottom too. INJ hasn't done well, which is very interesting. Yeah, so okay. We're starting to run out of time. So I think I should run through exactly what we do in this 100x coin club. What I call the 4 pillars of shitcoinery. First of all, we're playing manipulation. The only one of our trades that's looking like that is just on the tip of my tongue. But yeah, mostly I would prefer to trade all manipulations, because manipulations aren't 60-40 trades. They're like 80-20 trades. They're very high probability, right? The second thing we trade is momentum effects. The stuff that we talked about today. The third thing that we trade, knife catching or liquidity of last resort provision. And what that means, actually, I'll cover that another day. Actually, I'll cover the rest of the other day. But today we spent all day on momentum effects and breakouts. If this seems too hard for you, don't do it, because it is hard. If it seems too hard for you, either trade FINREV Lite, which you all have access to, or which is FINREV Lite is essentially a breakout-based system. So it's a mechanical version of what we did today without all the big brain stuff in it. Or ideally trade FINREV, so you just don't have to think about it. And where am I going? As you make money from these little shit coins. Oh, the third thing that we do is narrative plays. So narrative plays are when a sector gets hot, like the meme sector gets hot, or we get some on-chain thing that's an obvious manipulation, like we did with Cock Inu or Dog We've Had or Bonk or one of those, right? Like when a sector gets hot, like the meme sector we play those. Why? Because the odds are in our favor. Momentum doesn't work on those, right? For a bunch of reasons, which I won't explain now. Now, when we're talking about narrative plays, the thing you need to know is lightning doesn't strike twice. The whole meme was easy money thing, that is not going to happen the next cycle. It skips around. So don't be thinking that I'll put more money into meme coins and that's going to be the thing. That's going to fuck you. Because markets are self-adjusting. And Ian and I were talking about that earlier. So what I really recommend everyone doing is watching that video on our trend system, which I'll just post in the chat. Okay. I suggest you watch this video. This is going to be really, really useful. Yeah, you can still get into the 100x Coin Club. It's like everyone who turned up to the webinar got 3 months for free. Otherwise, it's like $9. And if you want to join these calls every week, we charge, it's really cheap. It's like $199 for 3 months. Yeah, if you attended the webinar, there should be an email in your there should be an email in your inbox with your login details. Now, what I suggest is everyone watch that video, and if this seems hard or something you don't have the time to, or you're worried about being able to get stuck at the end. Because the big problem with discretionary trading shitcoins, and I want to be eyes wide open with it, I want to be transparent with you, is it's not very difficult at all for us to make money when the market is like this. Like, I mean, you've all just seen it, like how much fucking money we're making. We're printing it. This is not me. Like, I'm a good trader, but this is not me. I could not and did not do that last year. If I could do that all the time, why the fuck would I be on these calls or, you know, teaching people how to do it? I just do that, you know, and you can't do it all the time. You can only do it like make hay when the sun shines kind of thing. And so we're making hay, but what I want you to do is keep the money you make. And that is the most important thing, is to keep that money and keep doubling that money again and again, not to grow it in the bear market and not lose it in the bear market. And just posted a link if you guys want to speak to the onboarding team, but let me just show you what. So if you bought crypto at the absolute stupidest time, at the very top, when all your mates were talking about it, our shit is actually up there now. You got absolutely wrecked. And the inherent problem with crypto is you need to time the exit. Nearly everyone bought in this zone, or bought in this zone, or bought in this zone. In fact, 81% of people buy in these zones. So you got to time the exit. And you might get, if you bought here, you're stuck way holding the bag, hoping that it's going to come good. Well, with FinRev, if you buy at the exact worst time, if you're the worst possible trader in the world, you still double your money even in a bear market like this. It's just a lower degree of difficulty. So what I'm suggesting that you do, and what I do, is I treat this like money I found on the ground, and I throw it in FinRev, and it doubles it, and it doubles every year on average. And we've got ways to make it even more than double. And then you never fucking look at it. Like, I haven't looked at mine in like 3 weeks or something. Like, honestly, I just don't check it. It works better if you keep your hands off the steering wheel. And for most people, like, I know it's very attractive to be able to, you know, 8x an account like we've done since November. I know that's very attractive and very appealing, but most of you are going to be happier with just 2xing an account and keeping it forever and 2xing it again and again and again. Like, this is just my honest advice. So I would, Thomas, I'm in GMT plus 7, which is Phuket, Thailand. Yeah, so I honestly recommend FinRev. It's the first thing I've ever recommended my parents use. Everyone uses it here. Honestly, it's really, really great. Any other questions before we knock it off?
That's a good question from Perry. Perry.
BCH.
Mm.
Okay, BCH is like Bitcoin high beta, right? So if we look at, shit, that's great. Yeah, extremely low volatility. You can see extremely low volatility and then a kickoff. There's got to be stop losses there. There's got to be stop losses there. That looks like a pretty fucking good trade, man. And what does FinRev think about it? 19.8 strong buy. Yeah. If I wasn't like ludicrously overbought right now, I'd probably buy some of that right now.
Adam was just asking a question about account size for FinRev. You know, I gave the general answer that you can purchase and pause if you want to save your nut. I think around about 5K. You probably could get a bit lower in there, but around about 5K.
I personally wouldn't do it with less than 5K. To be honest, what I would do is 100x coin club. See if you can jag a few winners. I mean, turn that into a decent grub stake, and then once it's a decent grub stake, don't be too greedy. Just shove it in FinRev, because the magic of compounding is that if you can just take a 5-year view, like a 5 or a 10-year view, any amount, if you can keep your hands off the steering wheel, it'll make you rich. Like,
it's like
Ron, yeah, you can look at anything in your portfolio. I haven't got my FinRev loaded up right now, but yeah, you can look at any portfolio exactly like this. You can do the charts. The charts are good.
like FinRev and discretionary trading reminds me of the fruit machines or the one-arm bandits, where you get that simple gamble option of double or nothing, and you're at that penultimate stage, and it's like the jackpot or nothing, the jackpot or nothing, and those kind of decisions are like whereas FinRev, it just does its thing, and you're not faced with that decision.
FinRev is very sensible compared to me. Like honestly, what I do in 100x Coin Club, I do it with a rounding error on my net worth. I've got about $5 million across my trading accounts, and I trade with like a couple hundred grand max in FinRev in 100x. Antoinette, can you please? So it's what it is for me. It's a psychological blow-off valve, so that I don't start acting like a cunt in other areas of my life just because I'm under pressure. Like, I can get all of my desire to be a degenerate gamble person. I can do that here with some skill, because I've got a lot of skill. Antoinette, buying Bitcoin and holding, this is a great time to do it. This is an excellent time to do it. Michael, I don't know Onyx, but let's take a quick look at the chart for you.
And just a reminder of 100x Coin Club members, Scott does a daily update video every day. The one this morning, I think, is 20 minutes. It covers every trade that we're in and more, and you can easily grab that inside the group.
Okay, so this is an interesting situation. This could be the start of a jam, but there's something suspicious about this.
Well, this one didn't really curl up in the way that we looked at on the example before. This seemed to shoot out the bolt with that great big candle, and then a lot
market
of
cap
selling.
43 million. That's a bit stinky. Let's look at the markets where it's traded. Only shit markets. Let's look at the perp markets for it. Okay, now we're going to add the perpetual futures contract to it. Yeah. Okay. I think, oh, that's very thin. Okay. Let me show you. This is how the pump system works. This is how market manipulations work. And this is really cool. This is a great short, by the way. This is a phenomenal short. So what the line here is the perpetual futures market on Bybit. The chart, which you can see how choppy and dotty that is, that's because it's very, very thinly traded. So what that tells us is that if we look at the spot, how much it takes to manipulate that coin, 2% depth is only $6,000. So it's going to cost you $6,000 in spot price to manipulate that coin 2%. So you can manipulate it up. They've manipulated it up 50% in a day, right? You can tell when it's a scam, because what they're doing is manipulating it on the spot where it's very easy and shorting it on the futures. So now they own the spot, and now they're selling the futures. And when you see manipulations, they're very, very obvious because you see this, you see this, you see this. This is the sign to sell. This is an absolutely classic pump system trade. Where are we at now? This is a short, by the way. Would have been nice to short it here. You probably missed the good bit of the short. That thing is probably, so manipulations are much higher probability than other things. So what this is insiders, like the people who own the coin or the market makers, trying to scam run it up, convince little guys to buy it, and then fuck them by shorting it and making money on the way down. This is a scam in progress. It would have, if I saw this, I would short this 100 times out of 100. And we got the best one that we got lately. The best one that we got lately was this one. We shorted it right here and we just rode it all the way down. So when you see that exact thing, that is absolutely the perfect. That is absolutely the perfect short trade. For the guy who didn't understand it and he's new, like, this is super nerd stuff. Most guys who've been trading 10 years don't understand this. So don't worry about it. Like my job is to give you an alert and say, buy this and sell that. I just educate people because it's better. It's easier to live with if you guys understand it. I wouldn't, like Ian, when did you start learning about all this? Like, you've been trading for years and years.
I suppose this is about maybe year 3.5 for me. And it just keeps compounding each year. It's one of those things you just literally learn something and then something else makes a bit more sense. And then but you need to be around other people that know more than you, that can say to you, hang on a minute, you're being stupid. That's the real accelerator, I suppose, with this, is having somebody that will say, no, hang on, whoa.
Perry, I don't know if there's any really good books. There's Al Brooks' first book is not very good, but his last three, he's got one book on trends, one on trading ranges, one on reversals, I think. They're okay, I guess.
So I got the Al Brooks price action course, right? But the thing is, it's absolutely nails. It's like, if you want to do like the Al Brooks type of price action, like, there's literally hundreds of hours of videos to watch just to get started with it, you know? So like,
Al was very helpful to me when I was starting off. I used to email him and he'd answer me questions, but he's a boring guy.
Wow, yeah. I mean, yes, the voice is not easy to listen to. So it's like the edge that we've got, like what you showed us today is like this distillation of like the key things to look for. Now, that's what Al Brooks will show you over hundreds and hundreds of hours of videos, but just at a completely different type of level. Like, it's a real commitment to get into it at that level. So I mean, that's why systematic trading is, I mean, I didn't respect systematic trading at first, if you know what I mean. I was just like, yeah, let's get into the discretionary. But you rock up with that systematic trade and you've got your set of rules, you stick to the rules and you sleep okay at night. But then when the markets are pumping, that's when you want to have enough knowledge or be in a place with somebody that's got enough knowledge so that you can scoop up the wins when it pumps. And then I think it was the 26th of December, have somebody that will come in with the great big hammer and go, right, stop, we're having too much fun, everybody out. And it's like, what? Everything's pumping. What do you mean get out? It's all pumping. But those decisions, I mean, that's what FinRev does. It makes those decisions every day. So like, when you're building your skills up as a trader, one of those things is decision fatigue. because you're looking at shit a bit too much and you're kind of thinking this and you're kind of thinking that. So I think what you went through today, I think that's really the stuff to focus on for people that are interested in the price action. Or go and see Al, and he's got honestly hundreds of hours for you to watch.
I quite like Al's stuff. It's not like I didn't learn from him. But it's not like price action is price action. If you've seen enough of it, you understand it. It's not materially different. May the pump system is the manipulation side of what we do in the 100x Coin Club. So coin manipulations only happen, like the one that we just looked at in Onyx. They are much higher probability and much more profitable than the stuff that we're doing right now. As profitable as that is, they're much more profitable. They also, people only manipulate coins when the market is in the right place to manipulate coins. So you can see that the last month we had no coin manipulations, and then someone's posting one that's like an obvious coin manipulation, like because the sun's shining again. So we kind of need more than one arrow in our quiver, if you know what I mean.
Mm.
Yeah, Bukowski is shit. Like that ain't real, dude. That ain't real. The 3 blind mice and the fucking heavenly harami and that shit ain't real. I spent a long time in my life testing all those patterns, and there's not one bit of thing in them. Guys, we've taken up enough of your time. I honestly, I really recommend FinRef. Like, it's a better way to trade for most of you. But we're all going to make you a big pile of cash in the 100x Coin Club over the next year. So that's cool too, and it's fun. Like 100x Coin Club is way more fun than FinRef will ever be.
All right, awesome. Well, thanks
Oh,
everybody. Thanks, Scott. Ta-da.
bye bye.